Hello, I'm your mortgage lender Rob, and welcome to 10 Minute Tuesday. This is a live and recorded video I host every few weeks where I share real estate and mortgage news, tips, hacks, and updates in 10 minutes or less. If you're not on my email list and want to be notified of future videos, sign up at my link on my website, link in the description. Q&A is at the end. Drop your questions whenever if you're attending live. Otherwise, you can jump ahead to see any kind of questions that pop up. Anyways, let's get on it with it. Today's topic is USDA loans. The first thing we always do, though, is do a quick rate update. You can see on the screen, rough estimate of rates. Of course, what you get will vary, but this is a quick snapshot. Conventional loans about 7.375%, up a little bit in the last few weeks. Your government loans, FHA, VA, USDA, no real change, which is not super common. Usually they go up together. For whatever reason, I haven't seen much change in the government loans. The narrative is that rates are going to keep moving up. They have been steadily for the last year and a half about. And tomorrow the Fed is meeting, February 20th. I'm seeing a typo on my screen now. September 20th, 2023. The Fed is expected to meet. They are meeting tomorrow, and they're expected to hike rates another 0.25%. So that won't change rates because we already have that priced in. But what the Fed says in their notes and press release afterwards will affect rates. So what'll happen, we'll see. Inflation is not really slowing all that much, so I think rates are going to keep going higher. But anyways, what you came here for, let's talk about USDA loans. First of all, what is it? The USDA loan, USDA stands for United States Department of Agriculture, and amongst a whole bunch of things related to farming and food production and land management, they also offer home loans. Now, home loans, they go through the USDA. The USDA, actually I say, guarantees them, but a lender like myself, we originate the loan. So you go to me for the loan. USDA is just the organization that does it, kind of like the VA. A lender still does the loan for you. So it's a home loan that allows a lot of buyers access to a home that may be out of the reach otherwise. And ignore the typo on the title there, the basics. So it's a zero down home loan. You can finance the full appraised value. This is the only loan that does this. What that means is if you're buying a house and the appraisal comes in above the sales price, you get to finance the difference and apply it towards closing costs. Normally, closing costs have to be paid out of pocket or by the seller. So this is the one loan that allows you to finance extra costs. We are actually seeing a lot of appraisals come in high because prices have gone up so much over the last couple of years that appraisals, as prices level off, appraisers are still giving us values based on the past trajectory. So this is a really unique time where a USDA buyer could actually have a decent chance of getting an appraisal above your sales price and then finance the closing costs, not having to worry about it. Now, of course, you don't know that until you get the appraisal, so it's a little bit of a gamble, but that's the unique thing about this loan. You have to buy in a eligible rural area. I have a map coming up that will show you where that is. A big benefit is rates are low, just like VA and FHA loans, but the MI or PMI, which stands for mortgage insurance, is about 35% cheaper than an FHA loan. So if you're buying a house for $500,000, that saves you about $80 a month. And then finally, qualification is subject to income limits based on your household size and the location where you're purchasing. So chart on the screen here, you can see a few common counties in Southern California. That's where I live. I can do a lot of states, about 9 states, mostly on the West Coast, but just contact me if you need to know if I can service your state. It's on my website as well. But here's how it works for income limits. So you have your household income has to be under this threshold on an annual basis, depending on your county and the number of people in your household. I won't read off the screen here. You can see it's booked into households that are 1 to 4 people or 5 people or greater, and that includes dependents above and below the age 18. So if you have an elderly parent or relative living with you, kids at home, everybody counts towards that. Now, eligible areas, shaded areas mean it's not eligible. So if you want to use the USDA loan, you have to purchase in an area that is outside of this shaded yellow area. So I've got a few maps on the screens. We can go through them quickly. This is northern Los Angeles County, Palmdale, Lancaster, Antelope Valley. All of Roseman, by the way, is not on here, but it's eligible. Everything north of here is pretty much eligible. We've got Los Angeles area. You can see most of actual, like the city of Los Angeles is ineligible. You can see a little middle there where it is eligible. Again, outside of that shaded area is eligible. Here's northern San Diego County and Riverside County. Right in the middle of there, you can see south of Temecula, north of about San Marcos, Escondido area is all USDA eligible. And then finally, San Diego, once you get to the east of San Diego into Ramona, out towards Alpine, that's all eligible as well. And you can find a map of this. If you just Google search USDA eligibility map, you'll find a link to the USDA.gov website, and you can browse this yourself. But it's a great program, a fantastic way to get a low monthly payment, low down payment, help with closing costs, and very, very few limitations. So if you want to chat with me about qualifying for this program, or you have a buyer who is looking for something like this, just give me a call or have someone reach out to me. Any questions in the chat? I do not see any. So thank you for viewing, and make it a great week, and I'll talk to you soon.